You ever look at something and it just doesn't add up? On one hand, you're hearing all this great news, but on the other, the numbers are telling a completely different story. Well, that is exactly what's happening with Solana right now. We're seeing this massive disconnect between its price on the market and what's actually being built. And today, we are going to figure out why.
I mean, just look at this. On one side, you've got the price, and it is struggling. It's buckling under $1.5 billion in selling pressure. And the technical charts, they're flashing a screaming strong sell. But then you look at the other side, and you've got global giants like Western Union and Cash App announcing huge integrations. And behind the scenes, the network is on the verge of its most ambitious tech upgrades ever. So, what is the real story here? So here's how we're going to get to the bottom of this. First, we'll lay out this paradox. Then we'll look at why the market is under so much pressure. After that, we'll dive deep into the tech upgrades, the engine under the hood. We'll see how the big institutions are reacting. And finally, we'll deliver our verdict on this whole price versus value debate.
And that brings us right to our central theme, the Solana paradox. How in the world can a network be getting fundamentally stronger while its price is getting weaker? It's the key question, isn't it? And to really answer that, we have to start by understanding the bearish side of the story. The real reasons the price is taking such a hit. Okay, let's dive right into this. You see, the story of Solana's recent price drop, it doesn't actually start with Solana. It starts with the rest of the market. The biggest driver here has been this massive liquidity shock, kicked off by $1.5 billion flying out of Bitcoin ETFs. And because Bitcoin is the big kahuna, when it sees that kind of selling, it creates this ripple effect across the entire crypto world. It's kind of like the tide going out. It just lowers all the boats. It forces liquidations everywhere, and Solana, being one of the biggest boats, gets caught right in the crossfire. And you can see this pressure reflected clear as day in the technical charts. There's this overwhelming strong sell consensus, with 14 different indicators all pointing down. The moving averages are almost all bearish, and the relative strength index, the RSI, is way down near 27. Now, for those who don't know, that signals a deeply oversold condition. It basically means the asset has been sold off so hard and so fast that it might even be undervalued. So yeah, from a pure trading perspective, the weakness is very, very real. But now, let's shift gears. Because if you look past the day-to-day charts and peer into the core technology, a completely different story starts to unfold. While the market is selling off, Solana's engineers are building something incredible. The absolute headliner here is Firedancer. Think of it like this. Right now, the Solana network basically runs on one main engine. Firedancer is a second, totally independent engine built from the ground up. So if one engine has a problem, the other one just keeps the whole network flying. Now, why does this matter so much? For big institutions, this is everything. It gets rid of a single point of failure, and it gives them that rock-solid institutional-grade reliability they need before they're going to deploy serious capital. And this chart just brilliantly illustrates the sheer power Firedancer is set to unlock. We're talking about a goal of over 1 million transactions per second. Now, that doesn't just dwarf other blockchains like Ethereum's Layer 2s. It's projected to be over 15 times faster than Visa's absolute maximum. This isn't just a numbers game, folks. We're talking about a revolutionary leap in performance. This could enable a whole new generation of apps that are just flat out impossible on any other chain today. And it's not just about raw speed. Another upgrade, called Alpine Glow, is all about making the network feel instantaneous. It's targeting a transaction finality of under 150 milliseconds. This is a direct attack on one of crypto's biggest headaches, waiting around. With Alpine Glow, clicking a button on a decentralized app will feel just as snappy and responsive as using any app on your phone. It's all about removing that friction. Now, what's really interesting is when you see how these fundamentals stack up against a key competitor like Polygon. Solana's Nakamoto coefficient is 5 times higher. That sounds complicated, but it's really just a key measure of decentralization. The higher the number, the more secure the network is. It also has over 8 times more active validators, and it's generating way more in-chain revenue, all while keeping transaction fees super low. So you have this incredibly high performance, increasingly decentralized, and economically robust engine being built. The obvious next question is, who's this attracting? Is the serious money, the big money, paying attention? Well, the data suggests the answer is a resounding yes.
I mean, this quote from the president of Coinbase Asset Management pretty much says it all. For the sophisticated institutional investors, it is no longer just a two-horse race with Bitcoin and Ethereum. Solana has firmly cemented itself as the default number 3 asset for any serious portfolio, and it's precisely because of the fundamental strengths we just talked about. And we can actually see this in the money flows. In one recent 11-day stretch, Solana ETFs saw $351 million in net inflows, with not a single day of outflows. This is regulated, institutional capital making a clear, powerful, directional bet on the future of this network.
But here is why that institutional money is so incredibly powerful. Analysts are pointing to what they call a 15x multiplier effect. See, when an ETF buys SOL, that supply gets taken off the market and basically locked away. This creates a supply squeeze, so every new dollar that comes in has a disproportionately huge impact on the price. The model projects that for every $1 billion of institutional investment, Solana's market cap could jump by $15 billion.
So if you follow that model and you assume this institutional momentum continues, analysts have derived a price target of around $335 for Solana. Okay, let's bring this all home. We've seen the bearish price action, we've seen the bullish fundamental story. It's time to reconcile the short-term noise with the long-term signal, and finally solve the paradox we started with. This slide really just sums up the whole disconnect perfectly. The short-term price pressure is being driven by these external, market-wide forces, liquidations, and macro trends that frankly have very little to do with Solana itself. But at the same time, the long-term value is being driven by pure internal strength, game-changing tech upgrades, institutional adoption, and landmark partnerships.
So, here's what you should really take away from all this. First, the price drop appears to be a reaction to the wider market, not some internal problem with Solana. Second, underneath all that noise, the network is getting a massive upgrade. Third, the world's biggest investors now see it as a core holding. And finally, legacy companies are literally choosing it to build their future payment systems. The gap between price and value seems to be hiding some significant underlying strength.
Which leaves us with one final provocative question. When you see a network's foundation getting stronger, its technology getting faster, and its adoption growing every single day, is it only a matter of time before its price finally catches up to its true value? The answer to that could have major implications for the entire future of the crypto landscape.